The market opens at 9:15. You take your trade at 9:30, and by 9:45, you complete your trade. You don't have to stare at the screen all day, nor do you need to use a bunch of indicators. Here, I'm going to show you a simple rule-based trading setup that's used by many people worldwide and is based on market structure, not on feelings. So today, I'll tell you about a 15-minute strategy that you can use for your intraday trading. So this strategy can be followed by beginners as well, and it works on all indices. This strategy also eliminates your emotional decisions because it's a rule-based setup, so emotions play a lesser role here. Let me be clear about one thing. There is no guaranteed system in trading. What works today might not work tomorrow. So this video is only for educational purposes. Whenever you want to use any trading strategy or indicator, the first thing you should do is backtest it. After backtesting, you can try it out with paper trading. Once you've done paper trading, then you can use it in the real market. So let's understand the strategy now. In this strategy, we are using the 15-minute time frame. So the first question that might come to your mind is, why are we using 15 minutes? Why not use the 1-minute chart or the 1-hour chart? We're not using the 1-minute chart because there's too much noise in it. You can see here, this is 8:48 and here it's 11:35. And in that time, so many candles have formed. If you look here, you can't even tell what the trend is. Is it negative? Is it positive? What is it? That's why we're not using the 1-minute chart. Now you might ask, why aren't we using the 1-hour chart? So I'm not using the 1-hour chart because the moves there are slow and it can take hours to get a signal. Since you're doing intraday trading, this can be frustrating for you. That's why I'm using the 15-minute time frame here. So I'm using the 15-minute time frame for this reason. Each candle represents 15 minutes, so the price action is clear and the noise gets filtered out here. Another thing is that institutional traders also closely watch this time frame. And the third point is that in the first 15 to 30 minutes after the opening, the market decides its direction, so you have a structured entry window. Here, it's important to understand a key concept. Before you trade on the 15-minute time frame, you need to look at the higher time frame bias, meaning you must check the 1 hour or even the 1 day time frame. If the trend on the daily chart is up, then on the 15-minute candlestick chart, we should only look for buying opportunities. Similarly, if the trend on the daily time frame is on the lower side, meaning there's a downtrend, then what do? When we trade on the 15-minute chart, we will only look for trades on the bearish side. In other words, we will only look for selling opportunities. So what you need to do is not go against the trend. You have to go with the trend. Now here we will also use some indicators as tools. The first thing we will use is the EMA, the exponential moving average. This will be the first thing we use. And here we will use two moving averages. This is very important, so you need to understand it well. We will use two EMAs here. The first will be the 9 EMA and the second will be the 21 EMA. These are the two EMAs we will use. After that, the second thing we will use is the RSI, and its length will be 14. The third thing we will use is support and resistance levels. So these are the three things we will use. First, the EMA, second, the RSI, and third, the support and resistance levels. So how you need to use this, I will explain to you further. Here, why are we using the EMA? The EMA will tell you the direction, meaning what the market trend is and in which direction the market is moving. So we are using the EMA here. In the indicator section, search for EMA and you'll see moving average exponential appear at the top. Here we are using the 9 EMA. The first one and the second one is the 21 EMA. Let's change its color to red, okay? So this blue one is the 9 EMA and this red one is the... So whenever our blue line is on top and the red line is below, it means our trend is upward. Similarly, when the red line is on top and the blue line is below, it means our trend is downward. This will be our first indicator, which we'll use for trend identification. After that, we are using RSI. RSI is a momentum indicator. We'll use it for momentum, so to use it, go to the indicator section and search here for RSI. Relative Strength Index, when you add it, it will look something like this. Your period should be 14 here. As you can see, you'll notice the 50, 70, and 30 levels. Now, if I go into the settings here, what I'll do is set this to 60, and here I'll set this to 40, and 50 will be neutral. So I'll click OK here. Now, whenever it's above 60, there will be bullish momentum. If it's below 40, there will be bearish momentum. And if it's around 50, it will be neutral, or you need to be cautious. These are the three things you need to understand in RSI. And these are the RSI settings, and I'm explaining them to you right now on the 1-day time frame. But when we trade on the 15-minute time frame, the RSI settings will change. I'll show you how to use all these things in the next step. Right now, I'm just explaining the indicators to you, how they work. After this, we'll add support and resistance levels. For that, what we'll do is go to the 1-hour time frame for support and resistance. I'll show you how to set support and resistance on the 1-hour time frame in the next part. Let me tell you what the actual strategy is, the one you'll use to enter trades. What you need to do is come to the daily time frame. On the daily time frame, you need to add EMAs. First, we'll add the EMAs here, exponential moving averages. We'll add both the 9 and the 21. So our first step will be to add the 9 and 21 EMAs here. Then we'll look at what the main trend is. As you can see here, the current trend is bearish, so we'll only look for trades in the bearish cycle. First, our rule is that we'll check what the trend is on the higher time frame. Then we'll use RSI. So what will we do? Here, we'll add a second indicator, which is the RSI. We'll use the RSI here and set it to 60. On the daily time frame, you also need to check if the RSI is below 40 or not. Only if it's below 40 will you have a bearish situation. So if it's below 40, it means bearish, and if it's above 60, it means bullish. Here, our RSI is below 40. This is also our time frame. It has been confirmed. Now, after that, we'll look at support and resistance. So this is acting as a resistance zone, just like this is acting as our support zone. After that, our next resistance will be here, and then there's another one here as well. So we've marked those. After that, we'll move to the 15-minute time frame. Now here we have both support and resistance. Our trend was bearish, so we won't trade on the buying side. We'll only take trades on the selling side. So here, the first step for entry is that you need to identify support and resistance on the 1-hour time frame. Second, what were we doing? We were finding the trend using RSI and EMA. Here, for entry, we'll draw support and resistance on the 1-hour time frame, so that becomes our first step. After that, the second step is to use the EMA crossover for entry. Since we're taking a bearish trade here, we'll only look at bearish side examples. So here, we'll check that the 21 EMA should be above and the 9 EMA should be below. Is that happening or not? You can see here, it's happening at this spot. The 21 EMA is above and the 9 EMA is below. Then it's happening again at this spot, as you can see. Here again, it's happening at this spot, as you can see. So for the selling side, the second rule is that the 9 EMA should be below and the 21 EMA should be above. On the 15-minute time frame, we've now seen the second rule, which is about the 9 and 21 EMAs. Here, you need to look for the crossover, which I've already explained to you. So where did the crossovers happen? Look here. There's a crossover on the selling side, then there's another crossover here on this candle, and if you go back, there's another crossover here. So you have 3 places where the crossover happened. Now for the third rule, we'll use another indicator, the RSI, to get confirmation. The RSI settings will remain at default. Just like we did on the 1-day time frame, 60, 50, and here 40, we don't need to change these. We'll leave them at default. This is the RSIM band, which we'll turn off. Now look here, our EMA crossover happened here, here, and here. So we'll go to the point where the RSI is below 50. You need to look for the RSI below 50 here, like you can see here. Here, our RSI is below 50, so we'll confirm here and we can enter here. Then, look here, where is our RSI? On this candle, our RSI is below 50, so we can enter here as well. After that, the third one is here. On this candle too, we can see that the RSI is below 50. So whenever you're going for a selling side trade, the RSI should be below 50. I'm not explaining the rest of the strategies. I'm explaining about this strategy. The length of the RSI should be below 50 on the bearish side and above 50 on the bullish side. This is our third rule that we need to follow. After that, there will be a fourth and final rule that you have to follow if you're using this strategy, which is about when to exit. For example, once we've taken a trade, let's say we've taken a short position on this candle, where will our stop loss be? It will be at the last swing. So where is the last swing? It's here. Here, the last swing has occurred, and what will our target be? Our target will be at the next support line if we are taking a trade on the selling side, so the support line will be our target. Similarly, if we take a trade on the buying side, then our target will be the resistance line. When we set up a buy, we will exit at the resistance line. In the same way, if we are on the selling side, we will exit at the support line. For example, if we took a short position here, our stop loss would be at the last swing, which is here, and our target would be here at the support line. After that, here as well, we took a position. Here, this is our swing, and our target will be here at this level. You must have understood by now that in the fourth rule, you have to use support and resistance for exits. You need to look for the same thing on the buying side as well. If you are taking a trade on the buying side, first you need to check the 1-day time frame to see what the trend is. Only if there is a buying trend should you go for a buy there. After that, you need to get confirmation from the RSI. On the 1-day time frame, the RSI should be above 60 if you are looking at the 1-day time frame for confirmation. After that, what will we do? Here, on the 1-hour time frame, we will draw support and resistance, which will be our first rule for entry. The second rule will be that we look for a crossover between the 9 and 21 EMA. When we were looking at the selling side, the 9 EMA should be below and the 21 EMA should be above. But if we are taking a trade on the buying side, then the 9 EMA should be above and the 21 EMA should be below. The third rule after that, for confirmation, we will check whether the RSI is above 50 or not if we are going for a buy. And the fourth and last rule will be for the buying side. That we should exit near the resistance. At the next level of resistance, that's where we will exit our trade. So these will be our 4 rules. I hope you understand how to use this strategy for the buying side as well. As I mentioned, first you need to backtest it and only then should you use it. So I hope you found this video informative. Like the video, share it, and subscribe to our channel. Thank you so much, guys.